Dude, I saw that Lambos popped up right away on your deathbed, dude. I know. Poor Lambos. Lambos got six too many boosters. Welcome everybody. How we doing? Hope everyone had a good day. What a daily candle on SPY, huh? 15 buck range. So what they got her listed as. That's impressive. And then it's just so funny. You just look a couple candles back and there's a 12 bucker. There's an 11 bucker. Like, what in the world is going on here? There's a 15er. Ah, 2 buck, something like that. Pre 2016, like just, inflated market. Let's see. Let's go like 10 years. I mean, see, before like basically before here, the SPY was boring. I mean, what were we getting here? There's a 3 bucks, a lot of 1 buck, 2 bucks. And then you can like, I mean, you can really. Just see it in the chart. Well, initially we get a new person as president. So we sell, God, I mean, I don't remember what that was. That was like 18% or something. We dropped. That was a mega, they didn't like it. And then you see right here as we quit, we dramatically reduce taxes on corporations, dramatically deregulate them, and do a little bit of rate cutting to try to, help it. And so then you can see from there, all of the sudden the market just changes and we just rally. Basically just nonstop. Right here, 2018. A lot of people don't know this, but there's like a minor financial crisis right here. They increased rates, and the market panicked. They increased rates, and then they were trying to hold them. And then somewhere around over here, they were not so politely told, if you do not reduce those rates, then you're going to get fired. So then this happened because they reduced rates at a rapid pace, which you should never do. And then from then on, we were back to free money world. So everything was rocking and rolling until COVID. So really, pre 2016 market, that was like why I got into options, because all of a sudden there was just massive deregulation on big businesses. Why would you not be long on big businesses? Ooh, viral entered a few swings. Oh, AAP from Lena. I don't know what AAP is. And this ain't the class yet. Advanced auto part. Sorry, I don't mean to laugh, Lambos. Have you ever seen advanced auto parts chart? Wow. I mean, you swung long on it, or like, what do we got going on here? Man, this is like, wow, that is impressive. So what are we at over here? The low of this was 37.51. Call that 37.49. So nice. We're just working on some like early 2000s support over here. Probably not the best sign in the world. But I mean, if you, I guess if you're gonna long it, you long it here. I don't know. But 26 down to 28 does not seem out of the question, I'll tell you that much. Oh, we got Sun in here. It's been a long time. Oh, Mr. SVX in the house. Viral some October 18th longs. I mean, there's no denying that this is a reversal candle. Like, this is a candle that like I would take a swing long on this yesterday, and like I mean it is, theoretically breaking this trend, I mean now today it is breaking this trend. I I wouldn't necessarily be looking for this thing to recover considering I mean just in the last month alone at one point it was down 40%. So, generally when that happens there is something a little bit fundamentally wrong with the company, which I'm assuming based on this giant gap down on earnings, things just aren't going super good for Advanced Auto Parts. Oh, well, they somehow beat estimates and got clobbered, but I'd have to read more into that. And so, uh, yeah, and I mean, I get it. Bounce up to this 40, maybe even you get this daily 9 EMA. I wonder where the SMAs are at. Nowhere helpful. Nowhere helpful. But yeah, you could get a bounce to this 40. I mean, for a bottom fishing trade, like we're at that major support. I mean, kind of support. Printing a reversal candle for the first time after like literally a month of red candles. And so, I mean, I see it. I see it. It's not something that I would get like, super married to that trade, but I like that. That is a unique eye. Oh. uh What kind of spread on those options? Very good question. Welcome, welcome everybody. We're just gonna give this a couple more minutes and see what's going on. AAP. So we got monthlies only, Rev. Wow. Well, people are getting in them, at least in those Octobers. That spread's only a buck wide. I mean, that is not what I expected to see on those options at all. I mean, the closer dated ones are not looking so hot, but still nothing. I mean, nothing appalling. Man, you got 5,000 OI on those at the money 40 calls for October. That's great. 700 volume today. So I mean, there's still whoever's in there is likely sticking with it so far. I did see that flow on TLT some puts. I don't remember exactly what it was. But as you can see, I actually pulled up the TLT chart today. This is, I believe, from doing this all today. So, I mean, we basically should have known that there was going to be some stuttering around this 100 level, in regards to those 20-year bonds. And so, it was worth it's you know it's worth it technically speaking for a short, but the risk that you have on shorting something like TLT is your technical analysis on it can be like wonderful, but it is such a fundamentally driven trader that it makes it or the stock is fundamentally driven that it makes it at least slightly touch and go to only stick with your technicals on it. But I did see, I should just pull it up real quick just to see what it was. I did see Tilia posted that flow on it. Um, yeah, some 98 puts for November. I mean, I get it. Reasonable enough strike. It's where, at least technically speaking, you would sort of expect to break below 100 to take us down to that 99, 98. So I get it. Large volume on it, 3 million bucks and 20,000 contracts. I mean, I think it's worth it just that it's kind of a relatively safe trade with the volatility that we could see, potential rate cut coming next week. We got all kinds of things that could really move the market. Yeah, I just feel like even if we push above it with 2.5 or so months time, that is a lot of time to just, to get that bond market to pull back a couple of bucks. Pretty reasonable bet, in my opinion. Again, technically speaking, we're pulling way away from that 20-day. I think it's a nice bet into, the next week FOMC. We'll see what happens. I think that one's definitely worth keeping your eye on. Okay, give me 1 second and we will get to rolling. So yeah, you're right. I mean this we'll get going here in just a second. Obviously, this lecture is not about rate cuts, you know. But you're right that typically rate cuts result in something bad. However, those times that you're speaking of, 2000s coming out of the dot-com bubble, '08, obviously the housing crash, COVID, they had already been cutting rates into COVID. And so the little bit of rate we had left getting cut into COVID had, in my opinion, little to nothing to do with, the recession we did see there. It had everything to do with the world shutting down. It didn't matter where our rates were at that time. I mean, ideally they would have been higher, so we were in a better place going into it. But it didn't matter what happened, we were getting clobbered. '08 didn't matter what happened, we were getting clobbered. And dot-com bubble 2000s, it didn't matter, we were getting clobbered. Regardless of where the rates were, at least in my opinion. This is a rate cut cycle where we're actually seeing, oh, tentatively seeing the Fed see what they want to. So they are cutting it out of happiness. They are cutting it because, you know, for all intents and purposes, they have won the fight on inflation. Their choices going forward can, of course, have a negative impact on the work that they've done. But this is a time where the Fed is cutting because they're actually happy with it. So I think this one could play different. I, of course, like you should, I mean, no matter all these people yelling, oh, we're going to rally on rate cuts. I mean, sure, we might see like a pop, but I definitely think it's a pop to be sold. I do think we'll sell into these rate cuts frequently or out of them. But I also think that people need to be realistic and understand that, a 25 basis point cut is not going to do a lot. Like people aren't going to just see an overnight difference. 50 basis point cut, kind of in the same boat. You might see a little bit of change, but you won't see much change. But at least in my opinion, we want to see that 25 next week. Powell has all but said they are going to cut rates. And so I think if we get that 25 basis point cut next week, that's good. I think if we see a 50, then there's, at least slightly apprehensive about some of the labor data that we've been getting lately. But to me, I hope we see a 25 basis point cut at least. I don't know about these crazies at the CME again, pricing in like 6 cuts by year end or whatever. I don't know. Yeah, no, we'll see. But I imagine 25 basis point cut could get good. Oh yeah, see, and I don't even know. I honestly don't even know the statistic of how often. Like, of course, you're gonna buy the market, and like, I mean, obviously, hit IWM calls that day if it happens, because it will bounce. But I think that is a bounce to sell into. Okay, so with that, welcome everybody. Happy to have you here, Dirty River. Tonight we are talking trading psychology. Definitely one of my favorite things to talk about. It's something that affects all traders all the time. Almost all of the DMs I get are at least in some way, shape, or form related to trading psychology, whether people know it or not. Just, issues that everybody has. And so this class I want to do a little bit different. I definitely am hoping for a lot of participation because trading psychology is hard for everybody. It doesn't matter who you are. We all suffer with it sometimes. We all feel FOMO. I mean, after a day like yesterday, um, you know, everybody's feeling like, well, dang it, like I could have done this. I think every single trader in the market has a story from yesterday about, I had these at this price and they went to this price. And so our job as traders to ignore those. And that's why I think trading psychology is so important and it helps us as traders so much to be able to remember those really, just insane days like we had yesterday. That was I mean, you aren't like maybe this one's actually blank. You aren't going to see this often, you know, like where, and I saw the statistic, I don't know how accurate it was, but basically SPY was down like just over 1.5 or one, just over 1%, and it recovered to up over 1%. So, I mean, you had a 1% down move followed by basically a 2% straight up move on SPY. Very uncommon. Don't get hung up on it. Just move on. You know, I mean, that day was awesome. We should, if you got to make a couple bucks yesterday, then great. But and we're just going to get into trading psychology. So the first part, I guess I'll say, so the first part of this class, we're going to talk a little bit about charts and how we can apply trading psychology to the charts while we're trading intraday. And it's going to be the same stuff you know, try to just like beat into you all every single week of, you know your entries, know your stop outs. The number one trading psychology thing that I see people struggle with, and I do think it's unfortunate, you know, some of it is because people in OOT are leading by example. Of course, those of us that do this, you know, mostly full time or at least focus on it a lot more than others do will never trade like this. But people have a very, very big issue with stopping out of trades. And it goes even beyond, you know, not knowing where their stop loss is. And that is, you know, in my opinion, one of people's biggest struggles. I think it's everybody's, like all newer traders, you know, if you've ever been, you know, if you've only been trading for 2, 3 years, whatever it is, you know, you have some experience, but you can still make these mistakes. And it is very, very difficult for people to accept the fact that they're wrong. And so that's what we tell, you know, that's why we try to tell everybody, admit you're wrong and admit, you know, God, we got Ethan in the house. Full, full port guy. So, you know, so we got, you know, you need to admit you're wrong and you need to admit you're wrong fast. Because what I always recommend to people is that, you know, there's a million trades in the market. Everybody feels like they're, oh, I missed this trade. Oh, look at this. I could have done this. I could have caught that. The best thing that people can do is admit you're wrong and look for a new entry. And so what I've been explaining to people and something that I brought up, I think I don't remember if I brought it up in the mastermind or in OOT. But something that I said is this market is building extremely bad trading habits, you know, and specifically the market of, you know, just to look at it, this market of, you know, from when we hit that all-time high in July to now is building horrible trading habits because we're having days like yesterday. We're having so many days like this where, you know, maybe the people who swung short on a strong close end up getting saved on a sell when it shouldn't be selling. And then the people who were chasing what they, you know, what was a strong close to swing into, but maybe not hold through the open, obviously, the people who chase that off the open, you know, they get smoked and smoked and smoked. And then all of a sudden they make money because the market reverses for them, you know? And so we've just had so much of this whipsaw action where, you know, the early bulls get saved and make money, or the early bears end up making money. And so that is, you know, that is just it's bad habits to have. And it is really playing into what we're talking about right now of people not using stop losses and not respecting their stop loss, and why I always recommend just look for a re-entry. There's always more entries to be had, and there's always trades to be had in the market if you want to look around, or you can just, you know, plan your trades and trade them. And so that's what I want to talk about a little bit more in detail. And so I'm just going to pull up my SPY chart from today. You guys know that I like to trade SPY more than anything else. And, you know, I trade other stuff every single day. But most people ask me about SPY because, you know, I trade it halfway decent or whatever. I don't know. And so I always post to my tabs, and I post to my tab or my tab, and I post to my tab every day, you know, talking about the SPY chart, talking about some things that I see, maybe talking about what I'm looking for to happen, or places to get into trades, or if I'm not in a trade, you know? And so the main things that I like to do anytime, you know, I'm trading is have my plans before they happen. So I tell people what to do. And so, you know, today was a day in SPY where, you know, obviously if you were an hourly 20 trader, it was it marked the bottom, or this nice double bottom, ample reasons to be looking long. But when I made my last post in here, my only comment was, hey, I have no interest in trading here because this is basically a range. And so what my words were, I'm going to wait to get to one of the extremes of the range to trade. And so today was a day that provided a really, really great example of how I trade the opening range, how I use trading psychology to plan all of my trades. And I sit and I wait for the trade to come. I have everything all planned out and I go with those trades. And so of course, when we do this, we can't look at everything that I'm looking at in the market. And you can't just say, hey, we're coming to opening range and I'm going to take a trade off the opening range just because we're at the opening range. If you're looking for a rejection up here, you need to have this plan. You can't just trade on feelings. This is something I see in trade floor all the time. I feel like we're going to dump. I feel like we're going to rip. Today was a prime example. People were shorting this just disgustingly bullish breakout where there's absolutely no reason to be short up here. And then this candle happens. And I just so happened to be in voice chat. And don't get me wrong, this candle stopped out a lot of longs and it made these like not much confirmation bears make some money. And so I was in voice chat and I heard it happen and everybody's celebrating and everybody's celebrating. They're saying, F your calls. Oh, we knew it. We knew it. And then this candle starts bouncing and starts bouncing and starts bouncing. And then this candle happens and voice chat has gone silent. And why have they gone silent? Because they ignored their trading psychology. They had a very questionable entry. You could say short the double top of resistance. I get it. But when you have this bullish of a move up, I'm not personally going to be the first one in line to fight the market. And so, people want to fight the market. They always want to short the top. They always want to long the bottom. People see the market ripping and all they can think about is puts, or see the market dumping and all they can talk about is calls. And I just trade with the market. So we're going to go back to the opening range and why it can be so helpful with trading psychology. So I made the post in my tab around this candle. It looks like basically right as this candle was opening is when I posted it. Yeah, 8:01. So that's when I posted it. And I said, I'm going to wait for the extremes of the range. And what do I mean by that? The lows or the highs, that's where I want to trade. That's where I think volatility comes from. I have no interest in this. I get messages all the time. Oh, will you take SPY calls here? Will you take SPY puts here? And people hate my answers because I basically always say no, because it's not how I trade. That doesn't mean you shouldn't take the trade, but I say, no, that's not how I trade. This is where I'd like to trade. So this one provided a really nice trade today that you could have ample planning and you could really get your psychology set. So I knew that I wanted to be short somewhere up here by the opening range. I was looking for a bit of a double top. We were seeing some assorted selling around the market, not big selling, but definitely not enough buying for me to want to, be looking for the breakout, looking for the long. So all of that aside, when we're at this candle, I know I want to be short at the top of the opening range. And this was one where, because we've had the volatility in the market, as much as I hate to say this, you've really needed to widen out your stops. So if I'm taking a trade at the opening range and my next closest level is up here, this 556.83, then I know this is where I stop. If I'm taking what could, potentially be the early entry, though we do have the opening range set, we're potentially setting a double top, I know above here is my stop. And so what do I do for that? And how do I help my trading psychology? Well, you guys know that I love really, really tight stops. And, if I was shorting this, for example, I would run a very, very tight stop because I'm shorting the opening range and I know this is my stop. So what do? I I size down. And that's one of people's biggest struggles. If you widen your stop, you size down your position. Because say I want to risk $50 on this trade, and that's how much money I am willing to lose. Well, I'm not going to buy, 10 contracts because that means they can only go down $5 and I lose my $50 and I have to stop out. I'm going to buy, 2 contracts, 3 contracts, so that each of those I can lose that 10, 15, $20. And that gives me enough room up to this next level. So I reduce size if I widen stops. And, I always trade with the same size positions. I think that's something where a ton of people struggle. If you're in a $500 position here and you make your $100 and then you're in a $1,000 position on this short, well, you have to lose half the amount of percentage to kill this $100 profit. So you keep your size, your dollar amount size the same. I see people frequently say, "Oh, I only trade 10 contracts." Well, that's great, but 10 $20 contracts versus 10 $900 contracts is a very, very dramatically different thing. So you need to always be using the same size of positions if you want to stay consistent on your gains. This doesn't mean all of the money in your account. That is never the correct position size. And so that's never what you want to do. And so here's my trade. And my trading psychology, I've sized down because I know my stop is wider. I know I'm short in the opening range. I know that my target is this level right here. And the next one is this level right here. I know how much risk I have on the trade. I don't remember how much risk I had on the trade. That's not important. But I know how much risk I have on the trade. And I know if we are breaking this level with any sort of volume, I am getting out of that trade. So I know all of these things ahead of time. And I know my targets, I know my entry, I know my stop out. And that's all I need to know. Those are the most important parts of any trade. And so, again, somebody asked me right here on this candle, would you short this double top? And I said yes. They asked me, and I think it was while this candle was forming, and they asked me, and I said yes, but I would have a hard stop over here. And so that's what they did. They shorted it and then they got stopped out. And that's fine. He's a buddy of mine. He's a good trader. And so he doesn't care. And so he had the stop right here. And he didn't hold. He had the same feelings as me. If we break that level, we're gonna go. And so he had his stop just set right above here. He shorted basically the close of this candle at this double top and then was stopped out, whatever it was, 1 minute later. And he only had 15 cents a risk, 20 cents a risk on it. And so he knew he could position size accordingly. And you're wrong. You just take the stop out. But that is where people start to struggle. And that is where you can end up getting caught in something like this. And people will frequently ignore what the market is telling them. And I get it, people panic in trades. People always want to chase trades. They want to do all of that stuff. And, people panic. But it's always important to remember we set our stop for a reason. If that stop triggers, that is because we as traders, in our psychology, we need to say, okay, we know when resistance breaks, this was resistance. When resistance breaks, we can only assume that the market is going to track to our next resistance. So when you short this double top that doesn't work, you stop out on the very next candle, no questions asked. Like I was hinting at earlier, this is one of those unfortunate days where the people who shorted this breakout got smoked and smoked and smoked and smoked some more smoked, and then saved and celebrated and hopefully click sell. Highly doubt they click sell because everybody was talking about we're going back to low a day in voice chat. So highly doubt they click sell. And, they got saved right here. But look at what you had to endure when you could have just taken the stop out. And so that is, and I always ask, and I even have the notes pulled up, of, what are some things that the number one things that people struggle with. And so I always try to, take notes and write down what you all say when we do these classes. And the number one thing that I see is bias and stopping out of trades. Those are the two things that people always ask about. And if that, if you can fix those two things, then you will find yourself having a much better go. And there's a bunch of good things on here. Recovery from a red day, taking a bad trade, knowing they're bad because you just want to be in a trade. A bunch of people obviously adding to losers, averaging down, that's one of the worst things you can do. And so all of those things are just so bad. And all we can do as traders, whether our trade works or our trade doesn't work, is just keep our mind under control. And so for me, and I think for a lot of other people, when they have their strict set of rules before entering the trade is when they perform the best. It's when they, people can't resist trading this kind of stuff. And you'll start hearing them say, like I saw it, and if the person's in here, I'm not picking on you or anything, but a person shorted down here. And then they said, oh, time decay is killing my contracts. And sure, it's taken some value off of them, but what is actually killing your contracts is you've held them while the market moved $1 against you, still within a range. So no volatility, no nothing. All it is doing is burning you. Wait for these high probability places and know your entry, stop out, exit, and follow your entry, stop out, exit, and all of a sudden you'll start doing much, much better. It's what I try to recommend to everybody to do. I think people have a very hard time with it. Obviously, like I can see when I look at my notes, it's funny how often people say, well, I was reading Trade Floor. And, unfortunately, that place can be bad and you can get some really bad information on that. I always like to give my disclaimer in both voice chat and Trade Floor. Know who you are, know who you're taking your trading advice from. What I always try to tell people is if if you are taking your own like trades, awesome. But if you go looking for somebody for advice on that trade, make sure you trust them. Because if you don't, then there's a very good chance that you're going to end up losing money. We see it all the time. Be very, very careful who you take advice on Trade Floor from. Okay, and so with that was what I wanted to do. I wanted to just kind of give you guys a little laydown of do these things before you enter a trade, and your psychology issues will go absolutely through the roof. Or sorry, they will disappear because you have nothing to worry about. You don't have to worry about FOMO. You don't have to worry about missing trades. You don't have to worry about stopping out of trades. You don't have to worry about where you're going to take profit because you have all of that planned first. Another one of the, very common questions that I get is, uh, how do I hold trades longer? And what I always try to tell people, and I think it's, for me, it's advice that works, and for a lot of other people, it's advice that works. You don't need to hold the trades longer. You need to hold to your target. That doesn't mean you buy SPY calls down here at 552 and you're like, I'm going to sell them at 560. That's just bad trading. But maybe you do get a nice low entry down here on some SPY calls. Well, your target is your next resistance. Your next target is your next resistance. If you have a bigger portfolio, obviously you're trimming at these levels and then moving your stops up, but it's not about hitting those home run trades. The people who go looking for the home run trades are the people who blow their ports. They have the gigantic swings. They're up 100% on the port one day, they're down 40% on the port the next day. That's the people who hunt home runs. If you take your trades at likely areas, short highs of ranges, long lows of ranges, your targets, and you hit those base hits, you're going to do way better than the people hunting for the home runs. Like I said, yesterday was such a bad day for people's trading psychology because they came into today looking for this type of move. And they don't understand just how rare these types of moves are. And so, and we had people getting deeply short saying, oh, we're going to 550. We're going to, low of day yesterday when we've had 3 or 4 red candles and that's it. You need to just keep everything realistic for yourself. Okay, and so with that's all I wanted to talk with charts tonight. And then from here, I want to start, getting some of you all involved. Maybe we can talk about some, maybe we can talk about some trades that you all have taken, some trades that you want to take, or even just things, or even just things that, you struggle with as a trader. Because what I always try to tell people, what I always try to tell people is, oh, hold on. Apologize, pulled my microphone cord out, so what I always try to tell people is if you have an issue with trading, there's a very, very good chance other people struggle from the exact same thing. So that's what I wanted to do tonight is, let's talk some of your all's issues. If you want, you can talk on the mic. If you just want to, send some messages in, uh, if you just want to send some messages in the chat, we can always, reference them from there. But let's talk about just some of the issues that you all have. So I'm gonna go through the chat. Let's see. Yeah, Flips is tricky. It's, he works really, really well for some people and not so well for other people. It's just, I think it's just those different trading styles for everybody. Oh, we got Crash in the house. Crash in the house. Yeah, Ethan, you're exactly right. And just to touch on this, we'll get down to it in a second. Is people like think every candle is an entry. And so, we'll just use voice chat as the example because everybody's been trying to hit these end of day moves. And they're they're buying in no man's land. Like you people jump into voice chat, for that last half hour, first candle, okay, I'm getting calls. You need to look at what the market is doing. If you are super range bound, why are you buying calls up here? Or, oh, this big dump candle, I'm going to short it. We're going to go back to that. We're just in a range. And so that's what I think people need to realize is sit and wait for opportune times to trade. Yeah, if we push up here, you can attempt to short it with a tight stop. If we push down here, you can attempt to long it with a tight stop. All of this is no entries. And if you're taking entries here, you're just straight up gambling. You need to let the market work. Just because we're going into close does not mean anything for entries changing. Rules are the exact same the first candle of the day as they are the last candle of the day. And they are every single time. So if you're just trying to buy things in no man's land, praying you get that end of day pump or dump, that's just a losing strategy. And people want to think, and I joke with one of my good friends, the ECE, every candle entry. And it's bad. And people try to do it all day long, or this type of move will happen and somebody will say spy calls. And it's like, well, I mean, maybe, but why didn't you like them $3 or $4 ago at some point before the breakout? I mean, and so, it's hard. People think every candle is offering an entry, but really they are not. Oh, there you go. Crash knows. Sometimes you just feel it. Thanks, Crash. Yep, the opening range I use is based on 90 minutes. It's the one I like the most. It's the one that I've tried the hour, I've tried the other, 45 minute, I've tried the hour, and I've tried the hour and a half, and it's just the best one. It's for me, it's the best one. And then oh, let's see. Let's see. I'm just going through questions here. Oh, we got Lambos. I don't even know where the people are. Okay, so yeah, let's see. We got some questions. Yeah, there you go. I mean, yeah, six, I see what you're saying. And just follow your rules. That's important. Just follow your rules and you will have so much more success trading. Lambo's got a question. I'm gonna try to get through all these. Lambos, can I like unmute you? I don't even know where you are, dude. What's going on here? Um, how do you get over big losses from the past? Well, you do your best to not take big losses, but also you just have to move on. The key to a big loss is not dwelling on it, remembering it, not doing whatever you did again, and then moving on. Because, I mean, we're seeing it, and I'm just going to use SPX as the example. Most people are down horrendously trading SPX, whether they want to admit it or not, but they are chasing that, $100 contract to 10,000 thinking it's going to solve all their issues, but it's not. They're getting deeper and deeper and deeper in the hole, chasing the gold nugget, which is just not the move. You need to. Trading is slow and steady. Talk to any of the people who consistently keep ports, have been trading for years, and they're going to tell you, yeah, I had a big win every once in a while. I do. I had a big win every once in a while. that's not what I'm looking for. It's like, I don't want to say it's luck, you know, you just get a good entry and sometimes it works real good, real fast. But that's not how you trade. You trade looking for reasonable trades day in and day out, and you will find yourself substantially more, substantially more successful because like we're seeing it in voice chat, we're seeing it in OT as a whole, like it's getting quiet in here. And let's be real here. It is it is in large part due to SPX. Rev, you really like that one, huh? See, but Ethan, you don't qualify for widen your stops. When you got the whole dang thing in there, you need the tightest stop possible. Oh, you guys were really talking about this. Oh, we got crash sentiment. So Tim, easiest way to know that you're in choppy sideways movement. Today was actually a beautiful day for it until obviously we got a breakout in today. What I like to tell people for is typically within the first hour of the day, you will have some really good information. And so on a day like today, even we can just go blank chart, so you don't have to look at all my stuff. On a day like today, strictly looking at the price action, we can go here early in the day. And so, nice rule of thumb is within the first hour of the day, the market likes, hour on an hour and a half. That's why opening ranges work so good. The market likes to set its trend. And something that I will look for is breakout or breakdown failures. So, off the open, we have a breakdown. It fails. Then we have a breakout that ultimately fails. At this point, until I see, and this is 1 hour into the day, we were setting these highs and then selling off of them. By this point, I've seen a breakdown fail, I've seen a breakout fail. I expect choppy movement until this breaks. And so, what I do in something like this, and this is an hour into the day, we've had this failure. I'm looking for ranged movement at this point. And that's all I need is just something as simple as that. It's just a common price action thing, of a 10 candle breakout. It's not uncommon to see these break down and then break out. But what we also need to notice here is yes, we had a failed breakdown. Yes, we had a failed breakout. And we're setting a higher low. So technically speaking, at this point, the trend is up and we should be looking for, ranged to upward trend movement. If it was the other way, if we had pushed up, sold down, and then we're setting a lower high or a lower low, then I would start to look for range to downward movement. And you can identify that, generally speaking, pretty early in the day. And so then for us, on a day like today, where we set our opening range. I mean, I'm not going to be like dead on, but we set our opening range. We had our range trading movement that we were looking for. So, shorting the highs was working, longing these lows. I know it's not the low of the range, but we can look at these as double bottoms, double bottom, triple bottom, whatever you want. We were looking for some upwards movement. So we probably weren't looking to short this. You could, like I said, that double topper was a reasonable enough short, but you got stopped out on the next candle. Ethan, great question. Profit goal. Absolutely not. Stop loss on the day. Absolutely. The issue with a goal is you'll start taking bad trades to meet it. And that's, maybe you're up, and I'm just going to throw out numbers. I know you're probably looking for more than this, but maybe you're up 200 bucks. You want to be up 200 bucks on the day. You're only up 180. So you try to take maybe a slightly bigger size position, quick scalp, looking for small gains to get to your goal. And then you lose your 180 in profit. So the profit goal, I think, is horrible. You should never have a profit goal. I don't care about percent. I don't care about dollar. I don't think you should do it. However, a stop loss you should have. It's going to be different for everybody. Maybe it's 50 bucks. Maybe it's 100 bucks. Maybe it's 1% of the port. Who knows what it is? But yes, you absolutely need to have a spot where you call it quits. Yeah, it's hard to take green and hard to cut red. I get it for everybody. But for me, I'm lucky because you know, I trade support and resistance. So I move my stops up. And how I move my stops up on trades, if anybody's like never seen this method that I describe, is, and I say I get in calls here. And then I get a breakout, but I get a bunch more range movement. But then I get this next push up, I move my stop up. Then anytime I get some form of a breakout candle, I move my stop up because if we're giving up lows, we're likely turning back around. So again, nice little breakout candle, push, 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 some more nice breakout candles. Maybe you push your stop here. Maybe you've got a nice move. So now you're really trailing it up tight. And ultimately you get stopped out, after catching a nice move. But use the candles. Oh, son, you're just full porting to make it back. Oh, yeah, I always paper hand those bird calls. Yeah, stop playing SPX and trade SPY. I was actually talking a little bit with Ramsey just today and today, and I was doing a little bit of SPY scalping. I even hit a little SPX in there. But we were unfortunately just listening to the voice chat go 0 for 4 on SPX. And during our little discussion, we had 5 for 5 nice trades on SPY and that one SPX by just waiting for the trade to come to us, not just entering in no man's land and getting burned on both sides. Yep, Ethan, and that's going back to the question that Mooney asked. How do you get over a big loss? Unfortunately, just move on. That's all you can do. And quit sizing big. If you're sizing big and you're stressing out in trades, that's how you're gonna blow the port. So always just size down. I know we all joke about like the YOLOers hitting the full port things and they get posted on the Instagram, but like let's be real, we don't support it. We're super happy that you made money when it works, but we don't want you doing it because, a lot of us in OT, myself, MMA, Tilio, we've been here for years. Zaves, we've been here for years. And we've seen people make and lose so much money that we just want to help. I get called a bully or get told that I'm like rude to people or whatever. I just keep it real. I want the best for everybody. And a lot of people can't handle being told what is best for them. And so that's what I try to do. Yeah, Ramsey, they don't listen. Yeah, Lampos knows. That was a good one. Uh, yeah, Ethan, exactly. So I'm really happy you said that because that's actually a rule that I try to teach people. And what he said is don't change your stop loss unless you're moving it into profit. And that is exactly right. What I teach people is, and it's kind of facetious, but stop losses only go one way. They go up into profit. A stop loss is never bumped down. You need to know what your stop is. Your stop might end up being a few more dollars than you wanted it to be because, a contract gets beat up or some unexpected volatility or whatever it may be. But if you are planning on stopping under a level, you always stop under that level. You never, never, change your stop loss to lose more money. You only change your stop loss when you are making money. Armando, I do frequently because I don't know, other people want different stuff in voice chat. And if you ever want me to like jump in a voice channel or anything, just let me know. And I share my screen all the time, talk about what I'm looking at. Sometimes we hit trades, sometimes we don't. Something that I really try to teach people is 90% of being a good trader is not doing anything. And I mean, it goes back to the every candle entry thing is you don't you don't need to be in a trade. And if you do, if you feel like you need to be in a trade, there's a very high probability that whatever the next trade you take is going to go against you. There's, as I said, there's trades in the market all over the market every single day. If you're into looking for different trades, and different stocks, I don't necessarily recommend it. Find, 5, 6 things you like to trade and just hammer those. But if you have 5 or 6 stocks that you like to trade, there is a very, very high probability that there's a very high probability that you'll find a good trade, not chasing a trade, none of that. You will find yourself a good trade in those 6 stocks every single day. There will always be one, and so don't force a trade. You guys see my charts. Like I keep them simple. Don't get me wrong. I don't have all my indicators on right now, but it's just some EMAs anyway. I mean, if we're at support and we're holding it, I buy calls and I stop out under the lower support. If if we are holding support, I'm in calls. If we are breaking support, hitting resistance, then I'm looking for puts. You keep it simple, but you don't want to just be in here in no man's land. And if you are, you need to be understanding that it's range trading. So if you're on the wrong side of it, you'll likely get smoked the wrong way. So that's why I always just keep it so simple, short highs and long lows. I'm not saying long every red candle of the day, but if you see something like this, some selling, candle gets bought up, this one gets bought. We've now held this support for 1, 2, 3 candles in a row. This is a reasonable enough long entry. You don't need to be buying calls. Oh, we're breaking above it. Calls. Oh, calls. We bounced it. I'm getting in. Oh, we bounced it again on this, candle's green. I'm in calls. And then it dumps red on you. You buy calls at support and then you stop out, and just keep it very simple, keep it very cut and dry. Maybe you look at this trade and you say, well, my stop would be under low of day, because that is where, if you're trading this, I mean, you can say stop under this level, but there's at least a decent chance you'll get wicked out, or you'll get a weak close under it and it'll bounce. So your stop needs to be down here at low a day. Maybe you don't feel comfortable having 70 cents of risk on the trade. So you look at this trade and you say, okay, not for me. That's it, because you're going to lose 75% of one delta. So if you're in $100 contract, you got 40 delta, you don't want to lose $30 and be down 30% on this move down here. I get that. So you need to know that before you enter the trade. Whereas up here, you got a big sell candle, you got an inside candle, an inside candle, an inside candle. There's nothing to trade here. Sure, you're holding support. You're too close to the top of the opening range to really be looking long, but this is not telling you to get in a trade. However, sell down to here, this is maybe telling you to get into a trade. You can look at this and say, okay, do I try to play the double bottom here? Knowing that if we push down to about these wicks, which ultimately we did, and are closing down by these wicks, you get out of the trade. That's your tight little 20, 30 cent stop that you're looking for. But you don't want anything to do with trades around here. I mean, can you catch a nice bounce? Sure. But then you're probably celebrating the breakout while all of your profits go away on the next candle. So, you just got to be realistic with your trades. Buy calls at support, buy puts at resistance. Don't trade in no man's land. Crashing at night. Yeah, that is pretty degen, I gotta say. Tim, what do you mean by that? Yeah, Armando, and that's what I always try to talk about. I'll mention some trades that I took, but we're hindsight trading. And this is something that I actually said in one of my last lectures we're hindsight trading. So if we're looking for trades or we're discussing past trades, we get to pretend like we're the best traders ever. If the person you're learning from only shows you hindsight trading, they aren't giving you charts throughout the day, you aren't hearing them in voice chat, you aren't hearing them mention trades that work before they work, be very careful listening to that person. And so you're right. Sometimes just watching it live is the best thing you can do, because you get to see how these things work out. And like, we can look at this and say, oh yeah, I would have longed that double bottom, but maybe some things were going on and this candle was scary and you didn't want to long that double bottom in the real market. And then we get to look back and say, oh, that was a double bottom. I would have longed that with stops below this wick. But instead of, you made money. It is hindsight trading. So it's all just pretend. Nice iPhone. Happy that they're working for you. The volume indice. My guy Els, he talks, huh? Wow. Nonstop. Volume profile. I don't use it. Toasty uses it. Tilia uses it. It's great. It's free. All brokerages have some form of volume profile. You'll have to change it based on, what time frames you're trying to use. You'll have to change some parameters. But yeah, it's nothing fancy. I mean, it's showing you where volume lies on the chart. It's actually I have nothing against it. It's really great. Thinkorswims is uh, far from the best one, but if you put it on, super ugly. I should go to the blank chart. but if you put it on, it's super ugly, but it shows you where the volume lies. So you can see it's funny because we don't have a lot of volume here, and it's interesting that it bounced on that next high volume, or where the volume started going back up. Rule of thumb is we have a lot of volume here, so we saw this one, we sold down to it. We got a lot of volume right here at 540. Slim chance we break it. If we do, we're likely flushing down to this 532. So it's great, it's free. I mean, if you want to use it, it can be a really powerful tool, but it's just a little much for me on my charts. There's even people that use them like intraday on individual candles and stuff. That's just not for me. Oh, Tim, I do those all the time. Yeah, but I'll try to do one that I can give a really awesome like explanation for. I actually have one from today, if anybody wants it. So I have very few levels on my Coca-Cola chart. A level that I mentioned in Mastermind, I'm sure you might have seen it, and it comes from this daily. Uh, I wanted originally, and I caught it on this day, I think, one of these days, and I caught it yesterday too. This 70.9 level. It was basically just the high of this candle back here. So today, again, we have a weaker Coca-Cola, but we sell down to kind of this, I'll say, less major daily trend, but here's our daily trend. And then here's our little tiny micro trend. It's actually off the 4 hour if you want to be technical, but this is what I was looking for. Saw this little nice wedge bottom sort of deal form, and then started looking, okay, I get a push up, and then, okay, I'm forming a nice little trend right here. This trend stuck under my level, stuck under my level, stuck under my level, breaks the level, breaks the trend all at the same time. And then, well, we can't see it right now due to how I'm zoomed, but we're getting an increase in buyer volume. And then somewhere on this candle, we actually had buyer volume uh, switching from sellers to buyers, reclaiming VWAPs, reclaiming EMAs, EMAs and VWAPs finally pointing up off of this low, setting a higher low. So at this point, I got like 6 things in my favor. So I hammered Coke, obviously targeting the 71, 71.05, and then I was all out here at this hourly 20. So this was a real life trade that I took today that I watched form all day long until right here when it was finally time to take that entry. So this was a real trade that I took today. Raymond Reddington always printing for everybody. Well, I meant Chardy, he's still around. Oh, I don't know about him being a spy mastermind. That guy was Chardy was wild. 539 doesn't sound good, but let's be real here, Rev, we're likely going to see it again. I mean, in my personal opinion, right now, or I shouldn't even say opinion, in my personal hope, if we can do basically this into elections, 535 to 565, I am a happy camper. Yeah, the volume profile is great. A lot of people use it. It's really good. It does, and it just shows you an awesome. People use it intraday a lot, and they'll talk about, oh, well, the point of control is right here, and blah blah blah. Well, when you've seen enough point of controls just get absolutely blasted through, especially in a highly volatile market like this, you'll step away from it. However, on a daily chart, when if we're in a bull market, like we're obviously in a very strong bull market, and you're looking for places to potentially buy dips on nice sell-offs, like we just had, that is a wonderful, wonderful addition for some confirmation. On those long time frames, it's really, really good. Toasty loves it. Shark loves it. Tilio goes like in waves. Sometimes all of a sudden he's talking about it again, other times it disappears, but it can be really, really great. I just love normal volume, and I got like this indicator I like, and it's got all the volume information intraday I could need. Like I said, if I see it, if we're selling big on the daily is really, or buying big in a bear market is really the only time I'm going to be pulling it up. Yeah, Kelly, we got it, West Coast time. We started 6:30. We got to keep something going. Got to, a little kick in the coffee cup. Okay, so wow, great everybody. I love this. I love talking with all of you. Apparently nobody wanted to get on the mic, but maybe we'll get them next time. But any more questions? Anything? Anybody got anything to say? Any more concerns? Something that you struggle with? Any of that. Oh, what's the blue on my volume? So honestly, it's nothing. It doesn't. So you can see, we can talk about it. There's some purple over here too. Um, it is showing a deviation in buyer. If it's blue, it's a deviation in buyer volume. If it's purple, it's a deviation in seller volume. But I don't love it. It's not something that I get behind. And what, or like, it's not something that I'll trade behind. Like when I see this, and this is going to sound interesting to you, when I see, and this one's too excessive, but when I see something like this, I'm starting to say, okay, it's exhausted. That's too much buying. Like I'm not going to use these deviations into buying to follow it. If anything, I'm going to use it to get out of the trade because they frequently represent exhaustion, at least in my experience. But my buddy who made this algo, I think Flips uses the same one, but my buddy who made this algo, I helped him work on it. He had a couple of things that he liked and he loves standard deviations. And so he had to get some sort of standard deviation and volume going in there. And then there's actually something that's also tied to like RSI, which I'm not an RSI user or believer, but I think one of these lines might be like the RSI. One of the lines is average volume, but uh, they're just to tell you deviations in volume in one direction. But as you can see here, if you chased this gigantic, 196,000 sellers to 3 million buyers candle, you got clobbered. So they frequently will show the end. Every once in a while, you will have a day uh, where you can get a little continuation on them. We were starting to get the blue deviation of buying on this candle. So that has a little more interest to me. This one, I'm not buying after that. And this one, I'm selling after. I'm definitely not an RSI guy. They're fine. Divergences are fine until they don't work and you get blown out. And I've seen a whole lot of, higher highs on RSI and lower lows on charts suddenly turn into just absolutely face blistering runs, or lower highs on RSI but not on the chart. We got a bearish divergence. Man, that just makes me want to buy calls. Okay, can you get the script for me? Maybe. Let me actually DM my friend and ask him, but yeah. Actually, uh, hold on. I think I did ask him. Yeah, shoot me a DM. Yeah, shoot me a DM. And I'm gonna look and just see. I might have asked him already, but he's the man. I'm sure he would not mind at all. Yeah, bless Lambo's cash out for it. Okay, well, if that is going to do it, thank you all so much for being here. I love talking trade and psychology. We had a nice little turnout. Sometimes these ones don't have very many people, but loved having all of you here. Loved the participation. I'm going to try to get in a trading psychology about once a month these days, just because I think people need it. You know, sometimes it's good to be yelled at that you're doing it wrong, and it can really help a lot. And so thank you all. Yeah, thank you all so much. Yep, son, thanks for being here. Been a while. Good to have you again. Yeah, thank you everybody. And as always, my DM's always open. Yeah, Ninja should have required attendance. But thank you all for being here. You guys are awesome, and we will catch you all tomorrow, Friday. Trade safe.